This is WLNS TV Lansing. Now, from your news leader, this is 6 News at 6.
General Motors expecting to be jumping back in the stock market, and soon. From bankruptcy to big profits, the new General Motors is expected to go with a public stock offering here in the near future.
But they are asking investors for more than $100 per share. And now a financial expert tells our Darren Cunningham why he feels that that amount is simply too much too soon.
General Motors stock value stood next to nothing on May 22, 2009.
It closed out at $1.43 a share.
Financial expert Ted Feight says this was the last publicly traded price 1 week before the company filed for Chapter 11. But today, after 2 quarters of profits, GM is expected to ask investors for $114 per share.
They're a company that have had to restructure. They're going through growing pains. We don't really know what's going to happen. We don't know what the competition is. Yes, they're in good shape, but I'm not sure that I'd buy it at $114 a share.
Feight says $5 to $20 a share is more reasonable. But he figures GM has a certain number of shares they want to sell, and at $114 each, it's the quickest way they can repay the federal government billions with interest.
The Democratic Party is kind of in a pinch, and they'd like to have some good news out there to help their people. If they could say, yes, we bailed out the General Motors and the automotive industry, which they did, and we even made a profit for the government, that would be a feather in their hat.
And a business move.
General Motors really doesn't want the government in there with them, telling them what to do. And I think General Motors would like to get control of their own company back again.
Feight says he's not sure who would pay $114 a share at this point, but whoever does. Darren Cunningham, 6 News.